The British pound is up against the US dollar as the latest UK inflation figures show that inflation gained by 5.4% annually in December, the highest level we have seen since March 1992. In fact, it's higher than the inflation we saw here just on the onset of the financial crisis in 2008. Interest rate markets are now projecting that the base rate will increase from 0.25% all the way up to maybe 1.25% by the November 3rd meeting. What does this mean for the British pound in general? Well, for the British pound in general, it should keep on gaining against some of its peers. But in the case of the US dollar, it has to do as well with what is happening in Europe, because it's not that often we see the British pound decouple to what's happening with the euro. If we look at it from the long run, I do think that we could potentially see a stronger dollar just because the ECB is not looking to raise interest rates anytime soon. From a technical perspective, this view is also supported. If you look at it from a big picture perspective, the trend is bearish below 138.36, which is high here from October. And in the short term, we had a really good, nice run to the upside. And we might be able to trade up again towards 137.34. But a break to 135.24 would probably mark this as a multi-week high. And that could potentially be the beginning of a slide back towards 132 once more.